Hello, traders, and welcome to this week's live event. I've got Harry on with me. We've had a market that is starting to form support. We had a nice up day this week, so we're going to get into plenty of market analysis. But before I do that, I'd like to start with my previous pick, and that came out Sunday evening. I highlighted Nvidia, and here you can see the action on Friday. That was the opening on Monday. That has been a beautiful pick. So I hope some of you got on board that one. I was looking to sell an out of the money bullish put spread, hoping for a little bit of a pullback. I think that's a great strategy to use right now while the market's still trying to find support. But once you start seeing these stacked long candles on that massive volume, if you're day trading, it's time to get long. So with that said, Harry, how are you doing? How's your year shaping up?
I'm feeling pretty good. I'm happy. I'm happy that I'm out of Moderna. Finally.
Yeah.
I still have 100 calls on it right now, but the bigger position I took the profit on. So that was a long hold. Right now, it's an interesting market today. This is the type of day where I'm paying special attention to the sectors and even to the industry indexes within the sectors, because there are certain ones, for example, if you look at tech and software infrastructure, so you're looking at the PanWs, you're looking at Microsoft, you're looking at even Snow, they're doing really well today. There are others that have sort of a kind of split personality today, where which I'm sure you're going to talk about, but you have the Nvidias and you have even Marvel doing really well. But then on the other end of the coin, you have ASML and some others that are not. So it's an interesting sector day in the market. And I'm looking at the stocks that have particular relative strength to their sectors as well as to the market.
Yeah, it's I've actually seen a lot of stocks right now that have nice directional movement on the upside, even though the market hasn't been going anywhere. We had a really nice open Monday. That to me was that set the tone. That also told me that buyers are back and that this dip is going to be brief and shallow. That's what we've been looking for. So why don't we go in and do a little market analysis? I'm going to highlight stocks as you call them out as well. So we'll use my version of Option Stalker Pro. I added a nice feature that I think you'll like. You can see that some of these bars are highlighted in here. Those are volume bars that we're going to be able to highlight in the new version. Got a lot of other nice ads as well. So let's go in. Yeah, this is Royal Flush green, and you can see a lot of the stocks that you mentioned. And when you start going through the searches, it's pretty easy to determine which groups or sectors are seeing nice price action. So as far as the overall market, and we had the CPI that's going to be coming out tomorrow. I'd mentioned pre-open that this is likely to be a pretty dull session. And the reason for that is that we've got big news pending tomorrow. So when the market opened higher and we had this bullish 10P cross, this is when we needed to break through that prior day high convincingly, keep adding to it. When that did not happen and we got this long red bar, that pretty much set the tone. Posted in the chat room, I said, that's going to tell us that this is going to be a fairly dull trading session. Let's go into the daily chart. Let's get our bearings. So this powerful move sets up a bullish flag formation. Get this little dip. We've been waiting for that dip. We've been expecting that dip. I've also been urging you not to take any shorts in here because you're vulnerable to a very long green bar, just like we saw Monday, came out of nowhere. And so if you're focused, instead of trying to manage losing shorts on Monday, instead you're focused on your longs. You're able to day trade from the long side, and as the day unfolded, even take some swings, because that was our objective on this pullback. We're going to be adding to our long swing positions when we're confident that the dip is fairly shallow, and it's going to be fairly brief. So we've got big bank earnings coming up on Friday. We have a holiday Monday, and we really don't get into the meat of earnings season for about another week to 2 weeks. So as we get closer to those mega cap tech earnings, that's when I'm looking for this big move up. Could even happen next week.
Now we
So
got
yes,
we got finance earnings coming at the end of this week. That tends to have a slightly outsized impact on the market, depending on how the banks are going to report. And then going into next week, we're obviously going to start off, with Netflix, and then kick into Tesla, and then bigger. We get the Nvidia always traditionally almost closes out earnings season, and you have sort of everything else in between. But yeah, it's going to be an interesting.
that is kind of weird because Nvidia wasn't even a stock that we were looking at 2 or 3 years ago as far as grouping them into the mega cap tech companies. And so you always had, like during earnings season, you had this 2 weeks after earnings season kicks off, you start hearing from the tech giants, and then they're pretty much done and the air kind of gets let out of the balloon. Well, now we've got this Nvidia stock that reports about 3 weeks after that. So yeah, it does really lengthen that whole earnings cycle. Your opinion on financials, do you have one? What are you looking for in terms of the price action?
I get, as you know, some intelligence in from JPM. So what I will do is tell you what they are saying. And what they are saying is they are strongest on Citigroup. They have an 8 out of 10 score for them. They're next strongest on Wells Fargo. They're least strong on BAC, Bank of America. And the reason is that they think that there's more defensive, lower credit risk names that would suit Bank of America better. So BlackRock, they are, let's see here. BlackRock, they're bullish on BlackRock, and they're mixed on things like Delta Airlines. So they're overall slightly bullish on the finances, but it's mainly on Citi that they're strong on, and of course JPM doesn't cover themselves. I don't know what they're thinking on Goldman yet. That'll be a bigger one.
Yes, that would be fun, wouldn't it? We're very bullish on JPM, by the way.
They don't cover themselves. So yeah, no, I tend not to play the finance stocks that much during earnings season. It's the way the rates are, there's going to be a very interesting, there's going to be still, even though it hasn't been in the headlines, there's still going to be attention on the regional banks. And have they recovered enough? Are they in any danger? It looks like they've made it through without too much damage and got themselves to the rate cuts. But, it's all about those rate cuts. And if banks are counting on more rate cuts that actually occur, well, that's going to go into the guidance and we'll see what happens. But, rate cuts are going to be the whole name of the game I foresee for 2024.
Yeah, as long as jobs remain strong, which they have been, as long as hourly wages are going up, which they have been, and as long as the Fed stays in higher for longer mode, that all bodes well for financials as far as I'm concerned. They're able to charge higher interest rates and they don't have bad loan write-downs because people are still working and the economy is humming. Does that mean that I feel that financial stocks are going to lift off? This is a very, very powerful move. Super, super steady price action. So I would not be shorting financials. They don't tend to make big moves after the earnings announcements because a lot of that news is already priced in. I think the banks pretty much get a feel for how their quarter is shaping up and how other banks might perform, to your point earlier, Harry. So they don't make big moves. So I'm looking for banks to kind of tread water And the one point that I'll make about the financial sector in general is I view the financial stocks in the banking system as the oil that lubricates the market engine. And when financial stocks are doing well, it's good generally for the market. When financial stocks are doing poorly, the engine doesn't have any oil. And then you got to be very, very careful of a potential credit crisis. So the fact that banks have done well and that they're rallying, I think that provides the market with a nice backdrop. So I am bullish on the market, as you know, have been bullish on it for quite some time. The last move here in October, I was already looking to get long, was expecting a big release because of the nature of this drop. So I had a question come up. Pete, what's your opinion of the CPI? How's the CPI going to come out tomorrow? I don't make predictions. I don't predict how numbers are going to come out. What I'm trying to do is to gauge what the market is going to do. And given that everyone's expectations right now are that inflation is going to continue to come down, it may continue to still come down and the reaction could be positive. What I'm keying off of is that I don't believe that any reaction to the CPI number, if it's negative, is going to last more than a few days because the focus is instantly going to shift to earnings. We're in earnings season right now. So yeah, you get a little blip higher in inflation. Okay, fine. The market can cope with that. So I would focus on your long positions, stick with your long swings. The stocks are grinding higher. All technical support is in place. They have relative strength. There is no reason to bail. Know that you might take a little heat on the CPI, but any dip, you probably would be more inclined to add to those swing positions than you would be to adjust and exit them. So that's my take on CPI.
I mean, if you look back, I mean, go back to even, before 2020 and so on, what the market reacts to changes obviously over time, and the market begins to absorb it, right? So for a while, way back when, every time that fucker tweeted Trump, the market would go crazy, right? Eventually it gets baked in. When the Ukraine war started, right? When Russia invaded Ukraine, every time there was a new headline on that, the market would go crazy. After a few months, it got baked in. Then came the CPI and the Fed and the not the CPI, came the raise in the rates, right? Eventually that too. Then the CPI, every time the CPI came out, huge, wild changes. It eventually gets baked in. What the market responds to changes over time. The different things. Now you can have 10 headlines on Ukraine right now and the market won't even blink, right? In fact, it was so baked in, it barely blinked on the crisis with Israel and Gaza, because that whole area now has been baked in and priced in. It's real. I think CPI reaction has wholly been priced in. That barring a dramatic departure from a pretty decent sized range of expectation, you're right. I don't think it's going to have much of an impact. You might get the algos quickly responding to a hot number and dropping the market, but it's not going to last because really these things are baked in.
Yeah, I'm going to give a hats off to you because I watched you do some trades about a year ago, and you had recognized that CPI was a great big nothing burger for many, many years, and all of a sudden it was what everyone was latching onto. And so pre-CPI release, you were buying some straddles and strangles on the S&P 500. And those worked out very nicely because the market had not yet adjusted to the importance of those numbers. And then 6 months after that time period, you started to see the reaction to CPI subside, and it meant less and less. The market was getting numb to it. And so you weren't putting straddles and strangles on at that time. You'd already realized that, hey, this news is largely adjusted within the market. Now, kind of one thing that I will say about that is I'm just going to take a look. Jan 10th, so CPI 11th, so December. In here, we did get the CPI, and we got a big liftoff on that number. Previously, there hadn't been that big a reaction to it. But in here, the market wanted to go higher. It was looking for a reason to go higher. And so CPI came in line, a little bit lower than expected. And then all of a sudden you get this gigantic whoosh higher that, oh, this is definitely going to put Fed in pause mode and possibly even in rate cut mode. And so CNBC and all the others are going to point to the CPI and go, that's why the market went higher right there, because of that good CPI number. Folks, that table had been set all the way back in here. You had asset managers waiting for a dip, couldn't get filled, never got the dip, had to get more aggressive, more aggressive, more aggressive. Then you get the CPI number, and now they're scrambling to get long. So, the headlines don't always give you the true picture.
I mean, I've never seen such a disconnect between the way the economy actually is, which the market seems to recognize. The economy is incredibly strong. Unemployment rate is low. I mean, we all know how well the economy is doing. But the fact is we don't, because there's a huge disconnect between Wall Street and Main Street. The earnings reports and the stocks seem to know how well the economy is doing. Even consumer spending shows how well the economy is doing. But most people don't think the economy is doing well, which is why retail, if you look at the percent of retail, there's a report that comes out. I got to find out from where it was. The percent longs versus shorts. How short are retail traders? And it doesn't really give you an insight into anything but how mindset is shifting among retail traders. And the percentage of retail traders that are short right now is incredibly high. It's well above norm. Whereas the percentage of institutions that are short right now is incredibly low, well below norm. Institutions are buying and buying and buying and going in, and retail keeps thinking we're at a top. And so they keep trying to short, right? So there's this counter trend mentality going on by retail who have this mentality that, well, we're being overbought here because the economy is not this good, but it is. And that disconnect is causing a problem for some retail traders. It's very strange.
Yes, and I think it's the bullish, bearish sentiment indicators reflect a lot of that also. And every time that you get a little market dip like this, and I've been very vocal about this in all my videos and in everything that I've written, is that we're going to get a little bit of a dip in here, and you're going to get bearish speculators who come in and try and short this market, or they try and get cute with it. You're going to have bullish speculators in here that are taking profits and that are just getting out of the position. And so on this pullback, these shorts are going to get squeezed. Those bearish speculators who've just gotten short, Monday was a huge wake-up call for them. And now the guys who are on the sidelines are thinking, oh man, I shouldn't have gotten out of that position. Look, the market is poised to take out that December high, and I'm not on board. So now they start coming in. And you've got the institutions buying, and that's when you get that big lift off. Yep. So we're going to be focusing on bullish trades today, aren't we?
I think so. Got a quick question here. If there's a question I can answer really quickly and easily, I'll do it. She asked, they started recording their P&L weekly and matching with the theoretical P&L and their profit factor. Very good. All the things you should be doing. He wants to know, or she wants to know, what standard deviation from the average profit is acceptable? As I've always said, it's great if you have obviously budgeted in, hey, I'm going to make $5,000 a month from trading, right? I'm going to $60,000 a year, let's just say, whatever it is. And all of a sudden you have a month where you make $10,000 and you're all very happy, but that's actually a warning sign, right? You don't want that. It's much better to make the 10 than to make 0 and go in the opposite direction. But you don't want those wide swings, because wide swings up mean you're capable of also doing wide swing down. You want a narrower field. If you want to be very, very conservative about it, you don't want your standard deviation to be more than 10% of your average. So if you average $10,000 a month, you don't want to go more than 1,000 up or down as your standard deviation. You want 68% of your time for your monthly to be between 9 and 11,000. 95% of the time, you want it to be between 8 and 12,000. That's standard deviation, right? That means 99% of the time, you're between $7,000 and $13,000. That's 99% of the time. That is your range, $7,000 to $13,000 if you're averaging 10. If you want to be a little bit more loose, you say, okay, 15%, $1,500 on a $10,000 average. But you don't really want your standard deviation to be more than that, because you will find that even though you had that great month with this huge upside, you're going to have the opposite occur. And if you are, how would you like to work for a job where at the end of the month or 2 weeks, you get your paycheck and it's like, wait a minute, this is like 90% less than I normally get. And the next month you get one that's 75% more. You can't depend on that, right? That's not a job that you probably want to have if you're trying to support a family, if you're paying bills, if you don't know month to month what you're getting. Trading is a job. So the smaller that standard deviation is, the better.
Yes, I'll add to that that variance, that standard deviation goes down with experience. So why was your account so volatile? What did you miss? Usually people are not asking themselves, what should my volatility be in my performance, until they have a big drawdown, until they start running into problems. Because face it, if you're making money hand over fist, nobody's worried about that. They're just looking for their next trade. But it's when you start getting into problems and you start having drawdowns that all of a sudden you're like, ooh, gee, I wonder if this is normal. Well, the first thing you should do is to try and recognize why you're having that account volatility. What did you miss? Chances are you missed something. You either went long, if you got long the market in here and you're trading weekly call debit spreads looking for some type of market continuation, you went too short term. You didn't give yourself enough time. You didn't get the follow through that you needed for those trades to work out. So try and get to the root cause of the volatility. And I think that's going to help you reduce it in the future, because it will go down and you're going to know high probability environments from lower probability environments, and then you'll adjust accordingly. Lower probability, you shorten your time frame, you go more hand-to-hand combat. Higher probability environments with a strong market trend like we have right now, you can start leaning into some of those longer term swing trades.
Mm-hmm. Okay. What stock do you like today most?
Well, I still like Nvidia. Let me just click through a few. This is beautiful, this Meta breakout right in here. I'm just going through green royal flush. This breakout on Meta is fantastic. And if we put up the 5-minute chart, you can see this is also, you can see these long green volume bars. If it's a heavy volume bar, then you'll see that red. But this is what Meta has been doing today on heavy volume, and
nice
there's
break
what the market's been doing.
Nice break
the
of
market
that H plus trend line there, starting on 1012, connecting across that whole 1220 to 1229 patch there, and then just breaks right through it today on Meta. Land of Goshen.
Look at that is a very long-term trend line. Yeah. And nicely balanced too, which I like for the longer term trend lines. Is you got a starting point here, an end point here, and you can see how the breach is actually considerably further than the end point. So yeah, that's a pretty significant high plus right in there. Love this bullish flag formation in here, strong volume. As I mentioned earlier, flat market, stock grinding higher. So I think Meta is going to be probably my pick. I did look at Home Depot. I like that. This is the same pattern, by the way, that I saw in Nvidia. Thursday and Friday last week, Nvidia was grinding higher when the market was going lower. That's why it made the Sunday video. That's why I felt Monday it was going to be going higher. So why don't you show us one, and then we'll go in and I'll take a look at a couple of others.
Oh, I really like this Home Depot breakout here. I mean, I love it above 355, which really gets it out of that compression there. But the last 4 days, it's a nice orderly breakout. It is not diverging too much from its EMA. It's not overextended. Really like Home Depot. Good luck there. I like PanW here. It is racing back up to its all-time high. I love stocks at an all-time high. It's one of my favorite conditions. You know, occasionally you'll have a situation like in PanW where on 1214 it hits the all-time high. It backs off a little bit, but if you're patient enough, bam, right back up to it. And since this is its second attempt at it, I think it's going to power through, keep going, and you're going to get a nice little run on PanW here with nothing but clear skies ahead of it. No reason for anyone to sell it. No bag holders ahead. So PanW at the moment is my pick. And I remember last time, I believe my pick was the healthcare stock. Well, shit. What the hell was it? Oh, hold on. I'll find that damn thing. Healthcare, expensive damn stock too. It was price. Oh yeah, it was, I think, Lilly. Last time my pick was Lilly, and so that would have been on 1-3, or actually that would have been on 1-3 where Lilly opened to 600, and Lilly is now at 629. So a week later, up $30 from right around where I picked it. Even though I might have picked it around 608 at the time, I know it dropped, and then bam, off it went. So Lilly was my pick last time, did quite well. PanW is my pick this time so far.
And I'm going to give you a shout out from someone who posted a question. Harry, awesome pick on Microsoft.
Yep.
So Microsoft also in the search, you can see this very gradual high minus trend line that's been broken to the upside. The stock is through this compression. We love compression breakouts because you don't feel like you're reaching. The stock has had plenty of time to digest all of these gains. So anybody that was looking to profit take, they're out of the way, and the buyers are getting more aggressive here. And now you have a breakout, which tells you they're getting very aggressive. And you've got a 5-minute chart with a nice grind higher in a dull market. So Microsoft to me looks really good.
And look at the story that chart is telling you. You have this L minus trend, L positive trend line, right? So you look at 1110, you can connect that right over to 12.4, connect that again to the bottom of 12.14, once again to the bottom of 1.2, 1.4, and 1.5. So you have like 6 touches, 5-6 touches on this line, making it a powerful line. It's got enough time to it. It's acting as strong support. Plus, that line coincides with the 50 SMA. So look at this story here. You have sellers bringing Microsoft down right to that strong support, right to that SMA. It stays there for 2 or 3 days. Doesn't take long for buyers to have the confidence, okay, so this support's holding, off to the races we go. We're going to start buying this up. And that's exactly what happens. If you look at that story there, that long compression, all right, we're going to test support out of this compression before we break it. Down it goes, and then right up through the EMA, right up past the downward sloping trend line from 1129 acting as resistance, connecting to 1229, and then connecting again to yesterday, 2 days ago, 1.8 through it. Microsoft, strong, bullish price action.
Yeah, I'm liking that one. I was going to take a look at Home Depot since you had just highlighted it. Let's go into the daily chart. And here you can see that there is some resistance. These trend lines are coming into play, but this is a classic bullish hammer, or excuse me, bullish flag formation here. So the stock finds support very far above AVWAP-E, which I like. And you can see that there was a previous horizontal was resistance, now support level. Stock bounces above that. You get this nice long green bullish engulfing candle because this January 3rd candle was completely erased. That's a good sign when you see that. And then you get follow through buying the next day on the 8th. Yeah, the stock looks like it wants to continue to move higher. Right now, it gapped up and it's a little bit flat, so it's not showing any strength relative to the market for day trading right now, but sure looks good from a swing standpoint. I had a question on how should you position yourself ahead of the CPI? Should you put more positions on before the CPI and then wait and then kind of ride out the storm after the CPI? Should you wait for that release? It really depends on what your opinion is. How are you interpreting that release? How do you think it's going to impact the market? If you really don't know, then you should keep your trading fairly light, because the last thing you want to do is to have a huge negative reaction to the number and you're loaded up with bullish trades. Then you're going to feel like a fool and it's going to do a lot of psychological damage. So it really comes down to what your opinion is. I've told you what my opinion is. So my opinion is I'm longer term bullish. I plan on taking some heat. Maybe I don't get it, but I'm mentally prepared for it. Bring it on, because I feel that any dip is going to be brief and shallow. I may not feel the same way about the next jobs report or about the next FOMC statement. So how you position yourself into scheduled events is going to be dependent upon your research. How did it react previously? What are you hearing? What tells you that there's going to be a reaction or no reaction? Those are the things that you're going to have to do on your own, and things that I'm trying to teach you how to do.
Got a question here. First, Jeff from Tampa. How are dark pool dealings legal? You should be very happy they are legal, or else price action would be all the fuck over the place. Let's give an example. Let's say you are a large pension and you have a decent amount of holdings in Nvidia or whatever. You want to reduce your position. You want to reduce it, and you want to start adding more into a more stable area. You want to put it in finance, whatever it is. Well, you're not a retail trader here. Your position is hundreds of millions of dollars, depending on the size of that pension. If you did that as a regular market order, you could tank the stock, even temporarily. You could tank the stock with an order of that size. So what you do is you do a dark pool, and what happens is that your identity is concealed. So one, you would have a bunch of people in the pension freaking out about what trades are going on, where you can't have that being micromanaged every day. Two, the transaction goes through, it shows up, you see the volume of it, but it's not going to dramatically impact the price of the stock. Plus, dark pool transactions are heavily regulated, much more than you think you are. Just about every single thing you think is shady is about as regulated as you can imagine. And every single thing that you don't think is shady is what is probably screwing you. So the things that screw you are the things that are blatant and right in your face. The stuff that you think are like behind the scenes and all that, trust me, that stuff is regulated to the hilt. Dark pool transactions only helps you as a retail trader, because otherwise you'd be looking at technicals, everything would be fine. You'd be going long on a stock, and then boom, out of nowhere, that stock would tank in 2 candles. You'd be like, what the hell just happened? And that's because Bill Ackman decided to sell $200 million of his Tesla position or something, and it got recorded right there as a market order. You don't want that. So you want dark pool to be legal. You want that to be an available option for people.
Yeah, in general, liquidity is liquidity. No matter where the trade goes off, it's going to have a ripple effect. If there's a huge options trade that goes off, the market makers on the other side of that options trade are going to have to adjust versus the underlying stock. My point is that that information is going to be reflected in the market and in price. It just might take a little bit longer for that to happen. But why should it be illegal? I mean, look at the whole foreign currency market. There's no centralized marketplace. It's all dark pools. It's banks dealing with each other. The same thing has been true for many, many years, where two large institutions, one is a seller, he's going out to look for a buyer. And they would do a prearranged trade and they would execute it on the exchange floor as a cross. Is that bullish or is it bearish? Somebody's buying 1,000,000 shares, someone's selling 1,000,000 shares. What information do I have to glean from that? It's the one-sided action that we really want to be aware of, and that's what's going to drive price. So when you start seeing trading and it's all favoring the long side, you're going to see it reflected in the chart, and that tells you that yeah, there are a lot of buyers and not many sellers right now. So we want to join that momentum, that direction.
Green Goblin Goo, I have the Bloomberg terminal. You can pretty much see it right here. There's Bloomberg terminal right there. Not worth it. No, it's not. It's very expensive, and basically what you get on Option Stalker Pro, or even a Thinkorswim, or you get there. It's not much different. The reason I have to have a Bloomberg terminal is really just one reason, because JPM requires a biometric verification that to put your trade orders through. And you need a biometric verification to sign into Bloomberg terminal. So I can chat directly with my JPM desk and say, put this order in or put that order in or do that. Whereas I can't do that over email with them even. I have to do it through that chat window. It's one of the only methods or areas they will take the orders through. But other than that, if I didn't have to use that for putting my orders into JPM, I would not have a Bloomberg terminal. There really is very little benefit. The only benefit there, I'll correct myself, is, for example, with the subscription I have right now, if I wanted to chat with Mark Cuban right now, I could do that, right? He's on there. I have access to it. I can send him a direct message right there to pretty much anyone, right? Bill Ackerman, whatever. They're right there. They're listed. With the subscription that I have on Bloomberg, I can chat with just about anybody in the world because they all use it. So in terms of networking, if I was trying to raise a lot of money, let's say, or do something like that, and I wanted to get in contact with a bunch of people, create a group chat of billionaires, okay, yeah, I can't do that anywhere else but on Bloomberg terminal. And so, sure, that I could use it for that. Barring that, for regular trading, you don't need it. There's no point to it. In fact, you get more information on Option Stalker than you do on the Bloomberg terminal in terms of things that you want to know. And that's just the truth of it.
Let's see. I had a question. Let me quickly go through here. Question on profit taking. Boy, this is just recurring. How do I take profits on a trade? When do I take profits on a trade? When I take profits on a trade, I feel good about it, but then the stock keeps going higher, and then that makes me feel bad. And when I don't take profits and the stock falls, then it makes me feel like an idiot for not locking in those profits. Everything that got you into the trade is the same type of decision-making approach that you use on the exit. What's the market doing, D1? Has it given me reason to suspect that the market might be rolling over? Right now I'm bullish. No, it hasn't. Expecting a shallow pullback. M5. Market done anything for my day trades to tell me that I need to exit the position? What's the market done around the VWAP? If everything is still intact for the trade, the stock D1 is strong. The stock M5 is strong. You continue to ride that position until one of those conditions changes. The market loses its relative strength. The market breaks through technical support. The stock starts to fall apart. Those are all things that are going to be clues that you should start taking some profits on your position. By the way, this is not an all or one game unless you're trading one share. Then it is an all or nothing situation, but you're learning. You should scale in and scale out. You take a small position, you're not quite sure early in the day what the market's going to do. So you're waiting for certain things to line up and set up to tell you that the market is going to be grinding higher. And that gives you time to observe what the stock is doing. Okay, all those puzzle pieces conform. So now you start adding to the position, scaling in. You do the same thing scaling out. You get a nice big run. The stock's not really participating in the last leg of this rally. I think I'll take a little bit off, reduce my position, and see what happens. And that'll make the remainder of your position much easier to manage. Bullish explosion alert for ISG. Ooh, that's actually a very nice technical breakout there. We've got a nice high minus breakout, a couple of them actually. Let's take a look at the 5-minute chart and see what's going on. I like that long-term high minus breakout there. That's sweet. Going to the 5-minute. Yep.
Yeah,
got a nice little pop up on volume. Would I chase it? That brings in the conversation we've had recently about solo long candles. You can't trust them. You have to monitor them, and you need to see immediate follow through to that boom, 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 boom. We'd prefer to see nice, small candles, about 5 of them. So there's news in here. Let's see if it holds. It's certainly got the volume. I like the D1 chart on it. Could have just been a large buy order. You know, somebody's in there buying it and they decided to step up. But yeah, I like the stock. I like this breakout here.
Someone asked about Moderna. I'm not Moderna, Nvidia, but I think we covered that nicely. I mean, the thing's just a beast. Whatever you do, don't try to get cute with it. Don't think, you know what, time to short Nvidia. Don't. It's not a good idea. Going back and circling back to what you said on profit taking, a good thing to do is a slow build. Like, watch what I'm going to do with Marvel here. I started with 15,000 shares today. So I'm going to build on that position as it's in profit. I'm not going to average down on the position. I'm going to build on it as it stays in profit, and get to my target size. So let's say I want to get to 100,000 shares of it. I'll just keep adding and adding and adding until I hit that target. So now I know when I hit the target, I am in profit. So now it's just a matter of how much profit do I want to get. You can set that profit target in your mind. But first things first, you really need to learn how to add to profitable positions before you begin to think about, you know, am I taking profit too early? The more you get into the mindset of adding to your profitable positions and building into profit, averaging up, you'll find your staying power on profit will improve dramatically. So someone asked if my crowd looks great, but 281 is a gap fill from 2021. How is important is it when trading now? Let's take a look at crowd for you. Okay, crowd. 281 is a gap fill from well, it's not much of a gap there, but it is.
I'm not seeing it.
What?
I'm not seeing the gap fill.
So, all the way back. He's looking at November 2021.
Yeah, I see that long red candle right in there. So
yeah, that's not really a gap there because the candle wicks kind of connect there. There's not much. So, I mean, I would look more at your trend lines on this thing. I would be a little bit more. I mean, you have a lot of room here on this trend line. There's a slight extension here. That's a pretty sharp slope on crowd today. And earnings far enough away on earnings. So you're good there. I mean, I'm looking at Crowd. Oddly enough, I think if I get a decent sized pullback in Crowd, I could look to do a nice out of the money BPS. The reason for that is I can close that maybe before the March 5th earnings date, and Crowd is one of those stocks that tend to surge into earnings. So if I can get a decent pullback, a regression down to the EMA 15, see it around 270, somewhere around there, and I can put a 230, 240 bullish put spread on, that's something I'd be interested in on Crowd. But it's a very volatile stock. This stock has a history of doing nothing for stretches of time, and then out of nowhere, nope, fuck it, boom, and it explodes up or down. It tends to go with the cybersecurity sector. Obviously, I like Pan W here a lot better as a long than Crowd. I don't think it's as extended, and it's not as kind of crazy stock, and it's more approaching its all-time high. So there's less in terms of pure resistance, natural resistance there. So that's my feeling.
I had a question on judging scheduled events, longer term market moving events. Does it get easier? How do you gauge what magnitude the move might have? As you do it over time, yes, you start to get a real feel for what news is important and what news isn't important. I try to highlight all those fundamental factors in the system, and you do get better at it. So you can kind of look ahead and see where you might be having some speed bumps, but like everything, it's just experience and going through all sorts of different market environments. Harry, you had mentioned the Trump tweets. Those are some crazy times to trade. I mean, everything's going great. The market is just clipping along, and you've got a nice intraday trend, and then blam, there comes a 30.5-minute drop in the S&P 500. Where the hell did that come from? Well, even that type of randomness, what did we do? Well, we're traders. We better adjust. We better adapt, or we're going to have our ass handed to us. Mm-hmm. So in the chat room, we started monitoring Trump's tweets. We started watching. Oh, he's got a press conference. Oh, lighten up, everybody. Who knows what could possibly happen? So that's what you do, is you start to recognize which events are going to have a bigger impact on the market.
And you also had to read into the content, right? Like you tweet like, oh, I got a bigger red button on my desk than North Korea. Okay, boom, market drops. But okay, that's not a materially impactful thing. It's just a kind of a gut instinct or algos that say, hey, it's threat of World War III goes up, drop the market, whatever. But a tweet that said, I'm raising tariffs on China. Okay, well, now you might take that drop a little bit more seriously, right? Because, well, shit, he's done it before. He probably could raise the tariffs again on China, and that would have a material impact on all of the earnings for those companies. And it did. A lot of them still haven't recovered, by the way. I mean, look at Baba. Look at a lot of those Chinese companies. A lot of them still haven't recovered from where they were on their highs. So, like any news story, back then with the Trump tweets, the only thing that was predictable was that it was going to be unpredictable. You were going to have volatility. It was just a matter, did you have the stomach for it? Did you have the stomach to ride it out? And did you know which ones were real and which ones weren't? A lot of people will look at a news story and go, oh, well, and not grasp the level of importance it really has or not. Algos play a very big role nowadays in how news stories get adjusted, get taken into account. And what they do is every one of these institutions have headline services, right? I use Trade Exchange, but institutions have even more advanced headlines. They scrape online and scrape these headlines, and they use NLP programming and very advanced, and they're able to grab these headlines, quickly go through them and decide, oh, Boeing, this, it's a negative. It's this much of a negative, this much weight, and then bam, it'll trigger a certain amount to selling or buying. That's the initial impact. Then will come a correction if needed, as human intervention comes in and goes, well, the algos just destroyed Boeing here, But we think that it's penalizing, but not enough to break that SMA. And if you saw, then bam, all of a sudden the 50 SMA started to hold there as human intervention came in, stopped the algos on the selling and said, wait a minute, this is bad, but we don't think it's bad enough for this. So you really have to understand the difference between the algos. I mean, you'll see when the FOMC comes out, the report comes out and instantly the market will react within 3 seconds. Nobody reads that fucking fast. That's the algos reading it and reacting. Then you'll see the correction start coming. So it's a different world even than it was 5 years ago when the news came out and actually took time. It took time for these things to be digested. Now it doesn't take as much time. Now it's bam.
Got a comment. Kudos to you, Harry, for stating that there are stocks that you don't like to trade, like Boeing.
Fucking
we all have our favorites like that.
Look, we're technical traders, right? Every now and then I'll make a fundamental trade and I'll tell you all I'm making a fundamental trade like I did on Moderna, right? That's a fundamental trade. That wasn't a technical trade. I pointed that out. But technical trades depend on stocks, buyers and selling, following universally agreed on technical lines of support and resistance. Now, debate all you want what qualifies as support and resistance, fib this and that and that. We know certain things, these are not debatable. These are support and resistance lines, so simple moving averages, these trend lines, so on. But when you have stocks that decide, screw it, I'm going to ignore all that shit and defy technical boundaries, I don't like trading them. Because I'm like, oh, Boeing, look, it's got this and it's doing great and it's a great long. And then for no reason or for a big, it doesn't matter. It seems like every 10 seconds a Boeing article pops up, the stock will tank and tank completely in defiance of its technical pattern. I like stocks that stick with their technical patterns and are more likely to. So yeah, there are certain stocks that are just, the spawn of Satan, not going to touch them. And no matter how tempting, I'm sure everyone has their no trade list. So yeah.
Yeah, one of them that's on my no trade list I'm going to highlight now, and it actually looks pretty good. Walmart has been one that has just screwed me 6 ways to Sunday in the past. And if you look at the chart, you can see why. I mean, everything looks great, great, great. Oh, here we go. Look at this. Oh, nice horizontal breakout. Yep, we're going. Whoosh, the bottom drops out. Oh, good. Well, we've just broken through this trend line. All the major moving averages are violated. Let's short that sucker. Whoosh, it goes up. I can't figure this stock out. I do like the fact that it's been able to rally above all the major moving averages. It's above the 100-day moving average today. It's in this big D1 earnings gap. So when you talk about gaps, that is a gap. That is something that can get filled. So you want nice big magnitude on those gaps. And then, yeah, you've got some area for it to fill in. And on a 5-minute basis, looks okay today, made its early surge, but now it's not able to advance. So I'm not telling you to buy Walmart. I'm not telling you to short it because it's on my do not trade list.
The only thing you can lock in on Walmart is it's a great long-term investing stock. Buy it now, wait 5 years, you're fine. Why? People are always going to need fucking Walmart, right? It's just always going to be. You can have a nuclear war and Bubba would be like, well, we're going to go to the Walmart tomorrow. Because it's always going to happen. There's a Walmart, and it's going to be within 5 miles of someone. You throw a rock, you hit a Walmart in this country. So if you're long-term investing, you're like, oh, I want to buy a stock and just hold it and not think about it and forget about it. You don't want the heartburn of looking at Walmart's chart. Yeah, buy it and hold it. And I'm sure within, you look at that long-term chart from back in 2018, the thing was $80. Now it's $160. I'm sure 5 years from now it'll be $320. Buy it, hold it, great. Trading it, Pete's right. It's a pain in the ass stock to trade. It's much better just buy it, hold it, let it alone.
I want to look at MDT very quickly. In my last video, I was reviewing all my previous picks. MDT looked good when I looked at it Sunday, and I mentioned, yeah, this could be my pick of the day, but it's not going to be. And you can see that stock has continued to move higher. I love this 100-day moving average that lent support. It had a couple of trend lines that were just being breached to the upside. And now you can see how the stock has continued on. Heavy volume, excellent relative strength. I also want to recap SNOW because that was a bullish put spread that I had put in one of my videos. And all of a sudden, everybody started to hit the panic button on it. And I had a bunch of questions on it. What should I do? What should I do? What should I do? Well, we put the spread on here when the market was getting toward the end of the year rally, and it had kind of flatlined. And I suspected that nothing was going to happen into year end. The stock had actually looked very nice. It has high option implied volatilities. It had already proven that it could hold that earnings gap. So I was looking for support in that area to hold. I also had the AVWAP-E to lean on. So I had the support that I wanted. I felt that the market wasn't going to do much of anything and that the stock had decent buyers in it. So I went way out of the money and I sold a Jan 19, 185, 182 bullish put spread for 50 cents, figuring that if this level was tested, it would find support there. So in here, I start getting the, what are we going to do with this? What are we going to do with this? Nothing. And the stock was pulling back, but the market was pulling back. So this is nothing other than a normal round of profit taking like you see all the time in this stock. And it did find support where it was supposed to. And now, look, we're almost $15 out of the money with another week to go, week and a half to go. That spread's probably trading for 10, 15 cents right now. So if you got a position that you're putting on, know why you're putting it on, know what you're expecting the market to do, know what you're expecting the stock to do, and then you're prepared to weather a pullback like this and evaluate the stock.
And keep in mind, out of the money bullish put spreads are statistics plays. That's what they are. The pure statistic plays. Why? Because the setup that Pete mentions and that is detailed in the wiki and in Pete's articles everywhere basically will give you an 80% plus win rate, right? About 80% of the time, a stock is not within 3 to 4 weeks time frame, not going to break through outside of earnings two major levels of support. As long as they're real major levels of support, a bullish stock in a bullish market without earnings in consideration, 80% of the time is not going to break below your short put, period. What type of credit do you need to get to make that a profitable trade? 20 cents on the dollar. If you get minimal 20 cents on the dollar as a credit for an out of the money, because it has to be out of the money if you're looking to make that those price points to be below those two levels of support, meaning it has to break two levels of support to endanger your trade. Where can you get that 20 cent to the dollar credit? If it's a $5 gap, 375, 370, you want to get $1 credit on that. That is mapped out very, very meticulously down to the, dot the I's, cross the T's, done this trade 400 or 500 times. Back in 2020, did this trade over 320 times with like a 92% win rate. So don't mess with the formula on it. It is a pure statistics trade. Get the setup right, get the market right, and you're going to be profitable on those trades. It's a great passive income method. What's my take, by the way, on the ETF BTC announcement today? Well, I love the hack, the fuck up yesterday that they basically announced it's approved, and they go, actually, not yet. Maybe tomorrow. It might be tomorrow. Someone did something, but I'm looking at what's happening right now in crypto, and I sold the 500 puts on MSTR, by the way, 100 of those for over $11. And crypto right now is popping. So something's happening on that. You got to be careful always of a Seldon news event. A lot of that news is baked in there. So I sold those puts like $90 out of the range of where I was. But I'd be careful on any type of Seldon news type response to these events here. Pete, any thoughts on the ETF, BTC, BS, CRAP?
Well, just the same, my approach to any binary event like that is to wait for the actual results and to see what the reaction is, and then decide if you want to trade it, because the news could already be priced in. Who knows how popular these ETFs are going to be? That popularity is going to determine how much stock these companies have to buy. So I would just wait for
Yes,
that. Sorry, I'm getting some kind of Windows alert here that I need to
no problem.
update my computer.
As a retail trader, it's very important to understand the concept of priced in and not use the retail trading mentality to think about it. An institution might buy up something leading into an event, knowing that other institutions are going to be doing the same thing, buying, buying, buying up into an event. And then once it gets to the event, bam, comes the sell off, even if the event is as expected and positive, right? Because the sell off will occur, then you can buy again at that dip and go back up again because it's still that good news. The idea of what's priced in or not priced in, 99% of the theories I hear as to why someone should buy a stock or not buy a stock that deals with fundamental analysis, it's just the height of arrogance to think that institutions have not priced in or not, if your theory had any merit, that theory already, that they somehow missed that. They didn't consider this on Netflix or whatever, and you did, so you're going to catch them flat-footed. Leave the armchair theories to the institutions and save yourself some money. ENPH, that haunted
Just
stock.
one
Oh my
more,
God, yes.
just
Sorry,
one more
Pete, go ahead.
note on coin. If you look at this chart, yeah, we have been trading the heck out of this stock in the chat room, day trading it, overnight swing trading. I mean, this is just powerful price action in here. And so you ride the move up, but you're always cautious of when is that first shoe going to drop. Well, off of a relative high right here, you get a long red bearish engulfing candle. Okay, market not really advancing into year end and making huge strides. Yeah, this would be a good place after a run like this for me to exit and to take some gains on it. So right now, on the eve of what is bound to be a decision one way or the other, it's a binary event. Let the news come out, see what the reaction is, then trade the backside of it. And if it is a solid news event, guess what? You got a lot of retail traders who are in there who are going to have to dump it. And so those are weak hands, and there'll be a shorting opportunity for you. If the news and the reaction is good, well, then you've got a bullish hammer kind of setting up here, and you can watch some of these different resistance levels like that one right there, which coincides with the midpoint of that long red candle. Get above that on heavy volume, and it looks like the stock's going to challenge the high. Yeah, you can get long on it. Just wait for the news.
Yes. Really liking Pan W here, by the way. I still think someone asked, what do I think about Tesla and PLTR? To me, those are untradeable stocks right now. I don't know why anyone would trade either of those. Look at PLTR. This thing can't seem to get above the SMA 100 at the moment. And even if it did, you need time for that to confirm over the SMA 100. And then Tesla, oh my God. I mentioned last time, Tesla is in a no trading zone for me right now. It is stuck between the SMAs. Let it break below the 200 SMA and confirm below it. Great, short it. Let it break above the SMA 100, confirm above that. Great, go long. Right now, bouncing around between these SMAs, no reason to touch it. Wouldn't go near it. It's just, anyway, don't want any part of that. You have any different opinion?
I completely agree with that. It's in no man's land right now. There is nothing to trade on this stock. You're wedged in between the 100-day and the 200-day moving average. And if you look at the previous price action, it's all over the place. And so the challenge and the analogy that I'm going to give you is you are paid based on your ability to predict price movement. That's how you make money as a directional trader. Would you rather try and predict the flight of a bat, or would you rather try and predict the flight of a goose that's in a V pattern? I'm going to take the goose.
I'll take the goose.
That's where my highest probability is going to be. This is a bat in flight. Okay. Coin.
Good analogy. This is a good question here. Great one, Goofy. Always has good questions and good picks. Great contributor on the chat room. Seeking opinion buying deep in the money calls. First, love that. Love them. I love it. I tend to go 0.8, 0.9 delta now on the calls. Mathematically, it just works out. There's very few times where the out of the money calls or even at the end money calls are a better deal. You use the at the money calls if you're doing a spread, call debit spread. Get that. But love that. Expiring a couple of months out. So you're kind of doing mini leaps, right? Is what you're thinking of. A leap is a year out, so call it mini leaps, whatever. So you're doing a deep in the money call. Like if you were to do that on a stock like, let's say Dash, right? You'd go to the March 15th and you'd take the 90 calls for $18.60. Got it. Look and choose between CAG and KHC. So here's where I have a little bit of an issue with those two. And that's on the ATR of those stocks. You getting the deep in the money calls, great. You're going to get close to 1-to-1 on your price movement. I like the chart on KHC as well. Both of those look good. You're going to be holding those over earnings if you're holding them, by the way, because you're doing a few months out. Maybe CAG, not so much, because that's not until April. CAG doesn't have as nice of a chart, so there must be something fundamental about taking those positions in the consumer packaged foods area that you have a reason behind that. Again, my problem is the ATR. If you're going through the effort of doing sort of these leaps, one, with a small ATR like that, you're getting very low premium. So the ability to even sell calls, you can sell weekly calls to offset the cost of those deep in the money calls that are a few months out. There's no point to it, right? Because you're not going to get anything for selling calls on those. Two, you're, over a couple of months, you might not see more than $1, $1.50 movement in either direction on that. So you're tying up a lot of capital in terms of these, for $1,500 an option on deep in the money calls that are a few months out based on a fundamental analysis of the sector or the industry on something that has a very minimal ATR. So just keep that all in mind. In theory, I don't dislike the idea of doing deep in the money calls that are far out, but the setup in the stock has to be right.
Question on the 10-year bond auction having an impact on the market. Yeah, you always want to have the TLT up. If there's a scheduled news event, you want to be aware of it. To that degree, oftentimes you'll have European bond auctions as well. Those tend to run about 3 hours before our market closes. So if you have the TLT up and you are aware of a bond auction, then have the chart up. If you feel that the reactions are going to be super negative or have a big move either way, then you want to lighten up your day trades. But longer term, these auctions are not having much of an impact at all. So I wouldn't be spooked out of a position unless I saw something dramatic happening in TLT after one of those announcements. To be honest with you, I don't even pay attention to them. There are times when the bond auctions will be more critical and more important, and they'll be market moving. Most of the time, they don't mean a lot.
There might be a cheap stock. Here's an interesting cheap stock for people to take a look at. It's got a little bit of resistance here to get through, but decent move today, decent chart, nice orderly upward movement. GEO, $11 stock. It's not bad. And I like this M5 right now. It just popped like crazy. GEO is not a bad little stock. If you're looking for a cheap stock, you're looking to maybe grab some, you can grab shares on that. Obviously, it's an $11 stock, or you can even, it's monthly options. You can even go out to the $10 calls for February 16th, or $1. You can get them for around $1.30. The stock's at $1.12 right now. You're not paying much in premium for that. That's a decent play for a stock like that to me.
What's my opinion of SMCI? Well, if you like predicting the flight of a bat, this is a good stock. You know, it's all over the place. What kind of rhyme or reason can you get out of this chart? Yeah, but it's a chip maker. Okay, I like Nvidia. I like that a lot better than I like this garbage. So anytime that you're looking for a stock trade, and we get them posted all the time in the chat room, and I look at the stock and I can't help but think, you've done all your research and this is the best pick you could come up with? And oftentimes I'll private message the person and it's like, well, no, it isn't. But, you know, I didn't want to post the same thing that everybody else is posting. So I thought I would ask about this one. Well, okay, thanks, but no thanks. We should just stay focused on what looks really good. So SMCI, you know, it looks like it's going to break out. It's going to break out. There's horizontal resistance. It's going to fill the gap. Nope. There's another rally. Oh, we're getting close here. Nope. Oh, we got a bullish explosion on PD. So let's take a look at that. This is a big breakout through a horizontal resistance at the 100-day, and we've also got a high minus and a high plus breakout. And let's see what's going on there. Yeah, these are some nice.
There's takeover interest in it.
Let's see what ISRG is doing. Did that stock have any follow through?
It stayed up there. Yes. I like it. More than half that green bar was maintained.
Yep, I like it. This thing looks pretty good here. So we've got the volume continuing, and could have been just a big buy order, might not have been any news, but this is a nice breakout through multiple trend lines. It's above all the major moving averages. So yeah, it's an expensive stock. Probably doesn't have great option liquidity, so be careful there. And nice. So I do want to interject just for a second. We should wrap up here pretty soon. But so let's take a look at the market very quickly, though, because something just happened that was interesting. We had higher low, higher low, higher low, testing the high of the day, long green candle. We can't assume that the market is just going to break out and keep going. We have to wait on these, especially when we've seen the context of the day is a great big nothing burger. So you don't come in here and get all hot and bothered and buy. This could just be to trigger all of these sellers here. Sell, 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 sell. And now that I'm short, because I feel that the market's going to roll over, I'm telling you what their mindset is, I'll just put my stop just above the high for the day. So you get these programs who will come in and search for those stop orders, and they come in and flush out those short sellers, so their buy stops are triggered. So you get that spike up. Well, for the novice trader, new high of the day, new high of the day. It's time to buy. You need to wait. See what happens, especially given the context that I've just told you about. And then the very next candle, what do you got? A long red engulfing candle. Blam, 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 whack-a-mole. Send that market right back into its range. So that's a pattern I just wanted to point out to you. You need follow through, and you didn't get it. And now we're actually getting a little bit more follow through selling. This is going to be a dull trading day.
By the way, just a funny headline, well, not too funny, but Meta was just confronted by our favorite Walmart and Match Group because they seem to be placing ads next to illicit sex content. So there you go. Meta is popping in some Walmart ads and some Match ads next to illicit sex content. But Meta is probably going to respond that the psychographic profile of people watching the illicit sex content are also people who are most likely to go to Walmart and use Match. But we'll see how it goes. Anyway,
Meta is still...
That's it for me.
Meta is still my pick of the day. I like that stock. I love the breakout. And one more time, is yours PANW, or did you have a different
NW is fine. Meta is yours. I love Meta too.
Yep. All right. That sounds great. Thanks so much, everyone, for watching. We
Thank
will
you.
see you soon. I'll do a video on Sunday and look for a recap then.
Bye, everyone.